Many people feel anxious about saving for retirement, and it's completely understandable. As you get closer to the later stages of your career, the thought of whether you'll have enough money to live comfortably can become overwhelming. Retirement should be a time when you can unwind, enjoy life, and focus on the things that truly matter without the stress of work or financial pressure. To make that possible, building a strong financial foundation is essential. The good news is that saving for retirement doesn't have to be complicated or intimidating. There are straightforward and effective strategies that anyone can use to grow their retirement savings over time. With consistent planning, discipline, and the right tools, you can create a secure and comfortable future for yourself. In this blog post, we'll walk through 7 practical ways to save for retirement and set yourself up for long-term financial stability. Understanding your retirement needs begins with gaining clarity about what your future lifestyle will require. Many people assume they'll need less money once they stop working, but with rising living expenses, healthcare costs, and personal goals such as travel or hobbies, it's easy to underestimate the true amount. Taking time to calculate what retirement might look like helps you set realistic goals and avoid financial stress later on. Start by estimating your future expenses. List your essential costs, including housing, utilities, groceries, insurance, and healthcare. Then add in the lifestyle choices you want to maintain, such as entertainment or travel. Many experts suggest planning for 70 to 80% of your current income, though the exact amount depends on your needs and vision for retirement. Your time horizon plays a major role as well. The younger you are, the more time your investments have to grow and recover from market fluctuations. Those closer to retirement may shift toward more stable investment options. Understanding the time you have allows you to determine how much you need to save and how aggressively you should invest. One of the simplest ways to begin saving for retirement is through employer-sponsored retirement plans. Programs like 401ks, 403(b)(s), and pension plans allow you to contribute a portion of your income directly into long-term investments. These plans usually include tax advantages and often lower fees. Many employers also offer matching contributions, meaning they add money to your retirement savings based on what you contribute. This is free money and one of the easiest ways to boost your retirement savings. Always try to contribute at least enough to receive the full match. Over time, the combination of consistent contributions and compounding growth can create substantial wealth, even if you start with small amounts. If you want to save beyond what your employer offers, or if you don't have access to a workplace plan, opening an individual retirement account is a smart step. IRAs give you more control over your investments while offering tax advantages. A traditional IRA lets you deduct contributions today and pay taxes when you withdraw the money in retirement, while a Roth IRA offers tax-free withdrawals later because contributions are made with after-tax income. Choosing between them depends on whether you expect to be in a higher or lower tax bracket in the future. IRAs also offer a wide range of investment choices, helping you build a more diversified and resilient retirement strategy. Paying off debt is another essential part of preparing for retirement because debt limits how much you can save. High-interest debts, such as credit cards, drain your income and slow your progress. Start by targeting the debts with the highest interest rates or use whichever repayment strategy keeps you motivated. You don't need to be completely debt-free before saving for retirement, but it's wise to at least contribute enough to get any employer match while aggressively reducing expensive debt. As balances shrink, redirect more money into your retirement accounts. Automating your savings can make the entire process easier and more consistent. When you automatically move money from your paycheck or bank account into your retirement plan, you remove the need for willpower or decision-making each month. Automation ensures you never skip a contribution and helps your savings grow steadily. Over time, these small, consistent deposits have a powerful impact on your financial future. Living below your means is another cornerstone of successful retirement planning. As your income increases, it's tempting to upgrade your lifestyle at the same pace, but doing so makes it harder to save meaningfully. Avoiding lifestyle creep allows you to keep more money for investing and long-term goals. Simple habits such as tracking spending, cutting unnecessary expenses, choosing cost-effective alternatives, and avoiding impulse purchases can dramatically improve your savings rate. Frugality isn't about depriving yourself. It's about choosing long-term financial security over short-term gratification. Increasing your income can accelerate your retirement savings even further. This might come from starting a side hustle, taking freelance work, or monetizing a skill you already have. Investing in education or certifications can open doors to higher-paying opportunities. If you're employed, negotiating a raise can directly increase your retirement contributions and long-term growth. Some people also build additional income streams through rental properties or dividend-paying investments, both of which can add passive income to your retirement plan. The more you earn, and the more intentionally you use that income, the faster you can build the retirement you envision. By understanding your needs, using the right tools, managing debt, automating contributions, living mindfully, and increasing your income, you can build a strong foundation for a secure and comfortable retirement. If this video helped you understand accounting a little better, don't forget to like, share, subscribe, and turn on notifications for more accounting tips and guides.